If I trace my kind of entrepreneurial path, like that's where it started, right? It's that my brain's missing that part of my brain that says like, maybe you should just say no. I was very confident, very cocky, I think. Call a spade a spade. I was cocky. Yeah. We actually literally paid our own people extra to do work for the product that would eventually kill us. Funny enough, I think you have better odds walking into a casino and trying to win some money than you do
being
a unicorn founder. Yeah. Please don't stalk an investor or don't even pretend that you're accidentally bumping into them after having cyberstalked them.
Hey there, risers and thrivers. Welcome back to On the Up and Up. I'm your host, Janine, and this podcast you're listening to is all about putting critical conversations in the forefront, amplifying the untold stories and achievements of the underrepresented and underestimated, and inspiring visionaries like yourself to pursue their dreams. This episode is touching on all three of those things thanks to our guest, Jag Singh, who is a charismatic serial entrepreneur that got his start in the world of politics, where he not only built companies, but also advised prominent figures such as Hillary Clinton, John Kerry, and Matthew Elliott. Since moving to the world of entrepreneurship, he has become one of Europe's most active angel investors. He was also the managing director of Techstars Berlin and is currently a partner at Berlin-based Angel Invest, one of Europe's most active early-stage funds, making over 50 investments at the pre-seed and seed stages every year. Before we jump into the conversation, it would mean the world to me if you would like, subscribe, and share this podcast with others that you think would also enjoy it. This simple action helps us to grow, so thank you in advance. And with that being said, let's jump into the conversation. Jag, it's a pleasure to have you on the podcast, and thank you so much for joining me.
Janine, thank you for having me here.
So you were in politics. How did that transition happen, or how did you manage to mesh the two worlds together when you got started?
So it's actually, I fell into the world of politics by accident because it was my therapist in Florida. I went in for a session and, after 15 minutes, she said, well, you don't really have any problems. You just need an outlet. And she goes, my husband's running for mayor. Why don't you just come volunteer in his campaign?
Wild. Okay.
So super, really random.
Extremely.
And I'm like, okay, let's do it. I show up to the campaign office. This is Tallahassee, Florida. And obviously because of the way I look, they thought I was tech support. And so they just handed me a computer and said, hey, I don't remember the sequence of words, but it was something along the lines of can you just flash the BIOS and change this SCSI drive? And I'm like, okay, sure.
You just said sure.
Just said sure. And that's the moment. If I trace my kind of entrepreneurial path, that's where it started, right? It's that my brain's missing that bit that says maybe you should just say no. I think I missed that because it's okay, great. I'll go sort it out. And this is, early 2000s, so there's no YouTube.
Yeah.
I literally had to go to a library, check out a book. It was this A+ guide to computer hardware or something like that. Had to learn the internals of the hardware internals of a computer, and then came back a week later. I still to this day question why, or haven't understood why they didn't question why it took me a week to bring that computer back. But anyway, I did it, and then it exposed me to the business of politics. Right, the campaign world back then was just incredibly inefficient, and so by virtue of just being there, by effectively almost seeing how inefficient things were, I was able to build tools and sell them into political campaigns that I was already working on. And so in some ways I was the customer building things that I knew I needed. And so when I think about that process of entrepreneurship, there's so many people who often repeat that advice from whether it's Paul Graham or Peter Thiel or anyone who's been an entrepreneur basically starts with the premise that someone needs something that you're building. Yeah. And again, I was in that lucky position of being the person who knew exactly what needed to be built because I was the customer. And so if I could build those tools for myself, and then eventually you learn to code and you start putting things together. All these things again happened because I had I like to think of I was in the right place, right time. But I also had that mindset of I wanted to explore, and I didn't.
You had a curiosity to figure it out.
But I also didn't let anything stop me. I didn't let excuses of well, okay, it's not, it might not. And when I say excuses, I don't mean like I'm not capable or something. I meant I never really put that boundary of, well, I don't know if someone's going to pay for this, or I don't know if they'll pay more than $100 a month for this. It's sort of like, no, let's just get it out there, see, and keep trying and iterating until it works. And the first startup essentially came out of that whole experience. It was actually a data science kind of focused startup, but it was very much around, there's a very specific need that large political parties, campaign groups, politicians have. And if I could meet that demand, I'd be in a great position and I would kind of corner the market and own that market. And that happened.
So wait, just taking it back really quickly so I get the full scope. So they asked you to take this like computer.
Yeah.
Asked you to fix it. You
Yep.
came back and then
The skinny was basically, I went to the campaign office with the fixed computer and they went, we don't really have a whole lot of stuff for you to do right now, because they actually thought I was going to do data entry.
okay.
And so I basically shadowed the campaign team for a couple of days. And then at the time, one of their biggest problems were they would send out teams of people to canvass neighborhoods where they knew there were pockets of registered voters who were sympathetic to a specific candidate or a specific cause or political party. And they were given clipboards, just paper, a pen, and a clipboard with a little bit of information about who was in which house, how they'd voted previously. And their job was to go get more information, whether it was just a phone number, an email address. Actually, email addresses wasn't even on that form at that time. But there was a field where it was like other information, and you were expected to go ask them for their email address, any information that they were willing to share, including their changes in their political leanings, just additional information that parties and campaign groups could use. And all that information was being collected, but the volunteers would come back to the campaign office and then it would just sit there. Nothing would happen with it.
Okay. And that's where you noticed that first inefficiency.
And I was like, that's really inefficient. I'm sure there's a way of fixing that. And because I'd actually assisted one of my professors in university with a similar problem, except it was with grading a stack of papers. And he was like, I bet there's a more efficient way of doing this. And we actually came up with a more efficient way. And that involved just using optical character recognition, OCR, basically scanning technology, which was available off the shelf, and just hacking together a little solution. And so just applying that solution into the campaign office saved them, I don't know, hundreds of man hours every week. Actually, it didn't just save them hundreds of man hours. It actually meant the data was being fed into the machine for the first time. And so suddenly seeing the transformative nature, the transformative power of having that data go into the right places, unlocked an incredible amount of what we would call productivity today. And when John Marks won and became mayor of Tallahassee, it basically just allowed me to offer the same sort of service, offer the same, bear in mind, I'm not getting paid at this point, right? Yeah. But just offered me a platform to be able to go talk to others within the party and to have like a reference customer and say, hey, we could do this. Now, there were a lot of other people who'd had the exact same idea who were actually doing even more cooler things. And then this is the second, I think, lesson that I learned on my entrepreneurial journey was share the stuff that you're doing.
That's interesting because a lot of people are scared.
Exactly. Everyone's worried. Everyone's like, oh, you're going to steal my idea and like you're going to make $1 billion with my idea. And I'm like, great. If they can make $1 billion with my idea, then they should. And maybe I can make $1 trillion with my idea, right? There were actually hundreds of companies that had already were very professional about this. And so that was the moment I realized, well, okay, maybe this isn't the thing that I want to build or the thing I can build. Okay. But what it meant was, again, having access to customers, or potential customers, having access to people with problems and just coming to them and saying, I'm going to build you a solution. I don't know what that solution is, but I'm going to help you fix your problems.
Interesting. So you were just going up and saying like, oh, what issues are you facing? Let me help you figure it out.
Now, when I look back, we've got terminology for all these things. That was the customer discovery phase. Back then, it was just like, I'm just trying to help, trying to be useful, trying to solve a problem for some people.
I think that's also really cool that you did do that because I think these days, or when I see other people, like friends or people my age who are interested in entrepreneurship, oftentimes we're hiding behind our computer screens and are really way too nervous to go out there and just ask someone, hey, what do you need help with? And to go through that. Instead, it's more like, okay, let me go through all the research, see what the problem is. And then, I've identified a problem, but we've never really gone out and actually talked to people and said, hey, can I help you with a problem?
Exactly. And I mean, out of the hundreds of companies that I've invested into, I would say the vast majority that have failed, and it's probably a 50% failure rate at this point. The vast majority that have failed because they don't keep up with that customer centricity. Whether you're building a B2C company or a B2B company or even just a sandwich shop, if you're not delivering what your customers want, and if you're not talking to your customers and even having that conversation with them. I also know a lot of companies that are now quite mature, startups that when I invested, I was probably one of their first investors, and they've now raised 5-6 rounds of funding. They're theoretically valued as unicorns. It's the moment when the founders, the core executives, the management team lose interest in the bread and butter, the day-to-day problems that their customers face. That's usually that moment where I'm like, okay, this company's not going to have the outcome that we all desire.
And how did you keep that up in your companies then that you had built? I mean, because it wasn't only that first one that you spun off, the data science one, but you also did other ones. So how did you manage to keep that at the core of your business?
It's I think the first 3 startups, I did a lot of it and I did it very well. It was the 4th startup where I didn't do enough of. And that's the one where we kind of crashed and burned. And it's partially because we talked to our customers a lot, but then we made some assumptions about those customers where we thought they'd stick with us. And I think there's a strand of hubris in there where I just assumed, when you're a founder who's had 2 decent exits and then the 3rd company you built is still going, and then you're now in your 4th company, and it's like, all right,
you start feeling a bit confident.
I was very confident, very cocky, I think. I'll call a spade a spade. I was cocky. Yeah.
Oh, I was gonna say I put it the nice way. I wanted to say arrogant.
Yeah, exactly.
Yeah.
Yep.
Gotcha. And so that was where you realized, okay, you really could have put the customer more at focus at that. In that 4th one.
Yeah.
But how do you know when you've talked to your customer enough? And because you do at some point have to make assumptions off of the conversations that you've had.
Sure. So it's funny. One of the reasons we failed was actually because and at the time I justified it as that we were helping customers. Yeah. What I hadn't realized was we were thinking we were helping our customers, but actually spent a lot of our resources contributing to the open source version of our product.
Okay.
And
oops.
We even, we donated a lot of money to the Apache Foundation, and we actually literally paid our own people extra to do work for the product that would eventually kill us.
And what was that business actually, may I ask?
It was essentially providing big data services to large corporates. Gotcha. So if you think Fortune 50, hedge funds, banks, we were early, we were off the blocks very early with a very, very interesting product, but by the time we got the product into the market, we'd actually empowered the open source version of the product enough so that the customers that we'd spoken to, I don't know if we'd spoken to them about a year before we actually launched, at the point when we were first talking to them, yeah, of course they wanted the product, they needed the product, they loved it. But given that we'd introduced a competitor, which was free, they sort of went, hang on, why do we have to pay you, $400K a year when we could just hire 2 or 3 data scientists, use the open source version, and actually we then own the product, we own all the data, we own the whole process. What do we need you for? And so, yeah, we did talk to our customers. We really helped them. I think we maybe helped them too much. But what we should have listened to was our own board of advisors who had said, are you sure you should be spending this money on all this, what we now think is frivolous, but at that time was also a little bit ego-driven, right? Yeah. We wanted to be seen to be empowering others and helping the open source revolution.
Yeah. Fair enough. Well, you live and you learn, I would say. Okay, and then after this 4th venture, though, at what point did you actually come over to Germany? Did you ever work on a venture in Germany?
No, I haven't. And I don't know if I would have ever had the stamina or the ability to get it done. I mean, we started the conversation talking about the notary and all that, but that's just a fraction of like the challenges that founders in Germany face, right? And everything from tax laws, immigration laws, they're just not as friendly. I mean, I know a lot of good people within the government who are trying to change that. I know there's a lot of emphasis on trying to make that change, but it's hard. And as I understand, if it's improved today, the version that we're dealing with today is like, I don't know, significantly better. So I just think, how the hell would I have built a company in 2005 or 2006? I don't know. I don't have the answer. I wish I did. It'd make life a lot more interesting when I have these conversations, for example. But so I worked in politics from 2003, and along the way, I also built companies. So the first company I built in 2005, 2006, had an exit in 2007, built another company, exited in 2009, and all those companies in some way were related to the political world, the political media world, and so there was a lot of overlap. But I never really focused on just one thing. My priorities were all over the place. And so at a certain point in 2016, I hit that point where I just had enough of the political world. And the co-founder of my last startup actually went on to become the chief executive of the Brexit campaign. Oh, wow. I saw the bitterness that a lot, and it wasn't just me. I mean, the UK was very divided. Then there was the US election, and I'd worked on the US election for a little bit. And so there came a point where I was like, I don't have anything to do with politics, not because the people I supported lost, but actually because I just wanted to build something. I wanted to help people build things up. A lot of the stuff that I did in the political world, I mean, there's a lot of stuff that I'm very proud of, a lot of initiatives that came out, but there's also a lot of negative, really crappy things. And so I just wanted to focus my life on something that was a lot more positive and fulfilling at the same time. And so helping people in that early stage of entrepreneurship felt like it really resonated on a couple of different levels. Also because, funnily enough, when I worked in the political side, I always lost interest as soon as a candidate won their as soon as a campaign or a candidate or an issue
that you were supporting,
especially if it's I mean, if it was a candidate that I was supporting, as soon as they won, I just had no interest in the governance side. And so for me, that kind of reconciles with why I'm a good early stage investor. Early stage investing is all about the promise. It's just like the campaign trail. Once you've won the election, it's about governing. It's about delivering, executing, which is the bit that I absolutely don't love to get involved with. And so it's kind of why when I look at my raison d'etre for being where I am today, it's because I see my purpose as helping others fulfill their dreams, realize their dreams, get to where they want to be, get to that position where they can then deliver on the promises that they're making.
Definitely. I think that's a really interesting parallel actually that you would draw. And when we're talking about these early stage startups that are realizing, I mean, they're starting at zero just to get to one. So when it comes to these early stage founders, what are the main things that they really need help with?
Right. Basically, so the simplest answer to that is founders need help with, it's usually 2 or 3 things. They either need help building up a network. They either need help with just capital. They already have some semblance of a network, they have some semblance of an idea, they have some semblance of execution, they just need capital, or they actually need help with executing. My partner at the fund here, Jens, he's the one who started Angel Invest. He often likes to equate investors with garbage men.
Okay, because that's interesting.
We're the ones just taking out the trash, just we help founders take out all the crap that you don't want to have to, well, ideally you handle all of it, but there's a bunch of stuff. Every founder is a human, right? Like we have limitations. There's only so many things you can do. And sometimes there's a bunch of other things that investors and advisors can help you with. And so that's where the metaphor comes from. I think what we look for is a mix of curiosity, resilience, and then also the ability to have serious conversations with whether it's investors, whether it's potential employees or customers. We want them to not just show up with some certainty around what it is that they're trying to build and planning to build. But at the end of the day, we're also investors. And so this is the part that I often like to remind founders. As an investor, my job is to return money to my investors. And so I only make money if the value of the company grows. And so I don't really care whether your product, does A or B or C. What I care about is your product going to be more valuable? Is your company going to be more valuable as a result of whatever you're doing? And I was having a conversation last night with one of the founders in our portfolio. And he was telling me about all these features that he's so excited to launch. And he was also sharing the enthusiasm that his customers had for these features. But I reminded him, and I said, this is all awesome. And I applaud you for delivering what your customers want. But is your product, are they going to end up paying more? Will they actually pay more for all these features? Will you be able to sell your product to more customers as a result of having these features? And he thought about it and he was like, not really. So I said, great. So like you're doing a lot of good stuff, but you're not really increasing the value of the company. What are you going, tell me what you're doing to increase the value of the company. And that's essentially what we're looking for.
And I think that's oftentimes one of the major hurdles for founders because they get so passionate about what they're working on and really, really distracted with all the feedback and they're really leaning into their passion. I can imagine that it's very easy for a founder to get quite distracted and very excited and there's so many cool things happening.
Totally.
You've got a lot going on at the same time.
Totally. And that discipline is, it's hard to measure. It's hard to, both qualitatively and quantitatively measure. I mean, I spend a lot of time with founders having conversations with them about how they're building their products and the methodologies and frameworks. And it's incredibly difficult. It's very difficult.
And may I take it actually back a little bit to your earlier question, because I think the ethos that you said of Techstars was helping founders succeed or do entrepreneurship everywhere.
Yeah.
And then you even alluded to if you're earlier, like you don't know if you could have done entrepreneurship here in Germany.
Yep.
And I know there's hope because it's going to get better. I've heard a few initiatives that are going on. So a lot of digitization will happen in the future, just not yet.
Right.
So the question that I have for you is also what are some of the major struggles that a lot of founders are facing here in Germany?
So just to your point about a lot of that digitization, it's happening, but the way it's happening is so haphazard that it's actually happening sometimes only for the benefit of people who know how to play the game or work the system. Yeah. To give you an example, there's a law that's coming into effect, or the law's already in effect, that's going to allow notaries to conduct their business digitally using teleconferencing facilities, except it only applies to people who have German citizenship. If you're like me, I don't have German citizenship, so my German ID document, it doesn't have the functionality enabled that a card reader would be able to read my ID document. So basically, all my friends and my partners are all German. They get to have these electronic notary sessions, but I'm the one that has to go in. And so like simple things like that, right? Yeah. I'll give you another example. When I speak to fund managers, I've invested into funds in other parts of the world. When I speak to those fund managers, usually takes them a week to basically go from having the idea, I want to build up a fund, to actually having money in the bank. Wow. You don't want to know how long it takes us in Germany to do the same thing.
Can I guess like 3 months? 4 months?
Maybe even more sometimes.
Wild, okay.
Right? And I get that a lot of these systems are in place to protect the folks who are giving us money, to protect all the individuals, to shield folks from liability, to protect the system. But it also then has a lot of repercussions that flow downstream to people who, again, may not fully understand how the system works. And actually, I mean, we both know a whole bunch of German folks who often happily or readily admit that they don't understand the system either.
And I think that's one of the biggest hurdles in the country, because I think Germany needs entrepreneurship and needs a lot of these founders with a migrant background. At least 21% of founders in Germany have a migration background in some way, shape, or form. However, when we look statistically speaking, the vast majority are struggling so much with the bureaucracy that it makes entrepreneurship here immensely unattractive. So for the vast majority of people, they actually end up going to the UK or the US to do entrepreneurship instead, because those environments are just a lot more friendly for them. Hey, it's me popping in quickly to ask, what do you think of the episode so far? Feel free to share your thoughts by leaving a comment or review. Also, it would mean the world to me if you would follow, like, and subscribe to On the Up and Up. This simple act helps us to grow. Thank you in advance, and back to the episode today.
Is it a surprise that I often tell founders not to incorporate in Germany? I mean,
Oof. Yeah.
Think about how long it takes you to set up a company, get a bank account.
Yeah.
Now, imagine you don't speak German, or imagine your German isn't great.
Yeah.
Or imagine you come from a country where the vast majority of countries that are not within, basically the vast majority of countries in the world are not part of the EU.
Yeah.
So imagine you come from a non-EU country and you now have to prove that you've got all these things. Oh, wait, now you need to get them translated. Oh, wait, you also need to get those notarized. You need to get it's just all this bureaucracy works against you. And so I know every single founder that I've spoken to that wanted to set up a company in the UK has usually done it within a day.
Yeah. Same in the States. You just set up a Delaware LLC, you're good to go.
You're good to go.
Yeah.
In fact, you can actually get your bank account done within the same time period, right? It's instant. And we've now been talking about founders and entrepreneurs quite a bit. But even when you look at talent, if you're looking at people who've done these things before, if you're trying to attract them, so one of our, we've got a pretty large portfolio of 120 plus companies. Quite a number of them are now what we would call mature, right? They're turning over tens of millions of euros a year. They need to hire experienced managers in order to grow even further. Some of them are expanding into the US. They need to make these hires. And sometimes those hires have to spend a bit of time in Germany. One of our companies that's actually based in Amsterdam, they had to hire someone in Germany. They made the offer. That person came. It took about 8 weeks for that person to get their tax ID number, get everything. They did the exact same thing in Amsterdam. And that person flew in from the US, went from the airport to the Dutch authorities have the setup where basically you walk into one building that sorts out your immigration. Basically, this person went into this building and then within about 25 minutes came out with an actual bank account. Nice. And on top of that, this person's now in the Netherlands. There's a scheme where they're giving huge tax breaks to individuals who are coming in who are basically high potential execs or managers, where you basically get 30% of your taxes as a rebate, if I understand correctly. Why would you choose to be in Germany or Berlin or in a market that's making life difficult?
Yeah. I see what you're saying. I think the other aspect of it, though, is if a founder is already here, what if there's someone who really is stuck to doing entrepreneurship here?
But that's the thing. Why do you have to be here? If we're treating the EU as one large market, there are places within the EU that might make life a little bit easier, right? I mean, the Netherlands is part of the EU. You should theoretically be able to. Now, again, I understand people have families, people have challenges, but at the end of the day, 99% of startups fail.
That's a tough stat. But yes.
It's a tough stat. So, have already spoken about this publicly, but when you show up on day one of being a founder of a startup, your job isn't really to help your company succeed. It's actually to prevent your company from failing.
Okay.
Right? If the vast majority of startups are going to fail, your job is to just always find the path of least resistance.
Okay.
And
what do you mean by path of least resistance? Whatever is going to help you.
Whatever's going to help you not fail. And so if you're going to spend, even if it's 15, 20 hours a month on admin, well, that's basically the amount of time that you could have spent on a lot of other things that are way more beneficial, that have a greater ROI. And so this is one of those points where I love living in Berlin is home for me now. I have a family. I have a lot of great friends. I do question the long-term viability of an ecosystem like this. If it becomes harder and harder to run a business, harder and harder to understand how to run a business, harder and harder to succeed at building a business. We've also got a bunch of companies that have completely failed. When I look at the insolvency process, I appreciate and understand why some of these things have been set up. But it just seems like we love torturing founders, not in addition to those founders now having had to go through the process of explaining to their investors over and over again that like, look, we tried everything. We just couldn't make it work. We're very sorry that, we took your trust, we took your money.
Yeah.
We weren't able to deliver. Oh wait, we now have to spend like about a year going through these insolvency processes that are just almost designed to humiliate an individual.
Is it actually true? If you go insolvent in Germany, you're also not allowed to start a business for a few years after that again, right?
It depends on the way that you
went insolvent.
Depends on the way you do it. Depends on the way that, and there's again, the devil's in the details. It's Germany.
Yeah.
But it's not as challenging as in that sense, but it is still challenging. And I usually recommend that anyone who's just gone through a failed startup shouldn't immediately jump back in. Like, you should take a bit of time to process and also just rebuild your energy levels. And it's a pretty demanding, taxing challenge. But when you are ready, we shouldn't create these artificial barriers. And that's one of the challenges that we keep facing over and over again. Now, that being said, there are still a lot of great things about being in Germany. There is still a great societal contract. There is still a lot of structure that you can use to your advantage when it comes to the peace of mind that you feel, contracts, etc. There are still virtues that are positive. Just maybe if we could tweak the whole process, make it a little bit less,
a little friendlier.
A little friendlier. I mean, I think if I think about it, like the ROI on just reducing that friction by 5 or 10% would be incredible.
Definitely. It's just making it a little bit more of a friendly environment for someone to be going out on limb, because entrepreneurship is stressful as is.
Right.
You're dealing with a lot of risks and uncertainty. And I think there is a beauty behind the German system, making sure that there is security and an overall little bit of a safety net or a blanket. But in that, the rigidity of it is what makes it really challenging for anyone who's trying to navigate that, especially when you don't speak the language.
Correct, exactly. And worse, when the expectations of, whether it's the investor or the bank or whatever provider of capital is just so out of sync with the standard practice of entrepreneurship. And by standard practice, I mean the practice that's been popularized by the US.
And actually, question to that, because I mean, there's a standard that is popularized by the US, but one of the things that we talked about was it being a bit of a rigged game. The entire there's a system.
There's an element of being a rigged game, of course.
So would you mind elaborating a little bit on that, and even maybe looking at that across different, like if you across like Germany and the US or even the UK, for example?
So I mean, I think calling it a rigged game can be pretty hard. It might be overly harsh. But if I think of a rigged game, it's a game where the house always wins, right? Funny enough, I think you have better odds walking into a casino and trying to win some money than you do
being
a unicorn founder. I mean, that's the truth.
Yeah.
And so when you look at it like that, okay, so what are the things that you can do? What are the levers that you have in order to maybe reduce those risks or even the odds a little bit in your favor? Assuming that moving and upping stakes and just moving to SF, where obviously the streets are paved with gold and VCs just write checks and do it for everything. They're just exactly right. I think a friend who's a VC was joking and said, like, all these founders just think like if they just buy a ticket, like as soon as they land, there's going to be a term sheet waiting for them at the airport, and
Kinda. I've noticed that with a few friends. They're like, I'm just going to go to the States and figure it out. And I'm like, okay.
Yeah. They're like, oh, when I land in Berlin airport, like, there's usually a guy with a sign with my name on it. But in the US, when I land, it's almost like they have a big check ready and it's just like, it's already signed and it's got my name on it. And I'm like, yeah, that's exactly how it works. Totally. It's not. Just for the avoidance of doubt to everyone out there, that's not how it works.
What happens, yeah.
It's nowhere close to what happens. So if we're talking about how we can even the odds a little bit or get the odds back in our favor, it's understanding, again, what the expectations of the system are. And so in Germany, the system works when you are growing very carefully and methodically, and you don't want to strive for hyper growth. You want to grow, but at a pace that allows you to make use of all the systems out there, whether it's the workers' council setup, whether it's the notaries, whether it's the tax advisors.
But that doesn't sound like a typical high growth, fast growing.
No, of course not.
Startup.
It's not. But that's if you want to succeed
Yeah.
in, I mean, if you wanted to succeed in, let's just pick a random way. If you want to succeed in Indonesia, you're going to have to adapt to that system. If you want to succeed in Nigeria, you're going to have to adapt to that system. I've got friends from Sweden who now live in Kenya, and they're trying to build a startup out there, and they've been pretty successful at it, but it requires adapting to the local customs. Now, I do recognize I'm not a local. I'm trying to be a local. Maybe one day I'll get there. Yeah, one day I'll get
On your way.
on my way. But like I recognize I'm not a local. I can maybe push and nudge the locals here to maybe make some changes that might be more conducive for others. But at the end of the day, like there needs to be pressure from within. You can't just have people who look like me or talk like me just coming out here and saying, hey, you need to do this differently.
I was going to say, at the end of the day, I think it's important to point out the changes that need to happen,
Sure.
but you can't fight the system either if you're trying to do something in it. But you're going to have to learn to play within the system if you want to be successful. And of course, at the same time, you can say, hey, this needs to change.
Right.
But change is going to happen slowly anyway, so figure out how to play it to your...
I don't know if I'd agree with that completely, because I mean, the idealist in me, the hopeless romantic in me says, yes, no, one person can make that difference and they can make that change. And we're all sitting here because one man or one woman actually said that one day. They woke up and they went, oh, great, this is the one thing that I'm going to try and fix. And they fixed it. And that allowed a whole bunch of change to happen, right? We're all benefiting from layers of change. But if we go back to talking about like what founders and entrepreneurs and anyone who's interested in entrepreneurship can do. So if the first thing is just being more and better educated about the expectations of the system, and so let's look at the system. We've got investors, you've got employees, and then you've got customers. And so I often joke, like people have asked me based on my experience of working in different geographies, they're like, is it really different? And I'm like, well, yeah. Like so in the U.S., let's say you're a business development or sales rep. You could pick up the phone, cold call the CEO or the CFO of a Fortune 500 company. And if you get them on the phone, they're going to answer with a, let's do this deal attitude. Okay. Right. So you dial the number, you get the person, and you're like, I have a solution that's going to work for you. Yeah. Do you want to hear me out? And they'll go, yeah, go on. I'll give you 30 seconds. Shoot. Hence why we have the elevator pitch. Yeah. In the UK, that setup would be, you call someone and the C-level executive, they'll be at their desk, but they're just going to watch that phone ring. They're not going to pick it up.
Ouch.
But if you go meet them at the pub later, you might be able to strike up a conversation with them. If you meet them at one of the members clubs, you'll be able to have that conversation and you might be able to sell them and close that deal. Whereas in Germany, well, for data protection reasons, that phone number's not listed, but the deals can still get done. Yeah. And so there's a different way of doing the same deal in different countries. And so you have to understand what it's going to take in order to get the deal done. So for example, like I hear a lot of founders and would-be entrepreneurs complain about data protection laws and regulations. They're like, well, I can no longer just cold call people. And I'm like, no, actually look at the regulations. You can't cold call people unless it's for a specific purpose. There's limits to what you can and can't do. But if you are aware of how to make that work, you still can make that work. I mean, business still happens every day in Germany. It's still a very strong, robust economy. So again, being aware of what you can and can't do, that's already a big step. And then the second bit is, or the follow-up to that is, how can you build up a coalition of people around you, advisors, people who've done it before, and that's, I think, podcasts like these, there's no shortage of people who are there to help. Mm-hmm. And well, if you can just ping them on LinkedIn, you can ping them on Zing and just say, hi, I heard you on a podcast. I saw your article in Handelsblatt. I saw whatever blog post you've published or your tweet storm, whatever. You can just reach out to these people and say, I would love a bit of guidance, love a bit of help. We're in a very unique stage in time where there's a lot of people who have a lot of experience, have had a lot of success, and they're all ready to give back. That's very different from the world where I started out in 2004, where there weren't a lot of founders who had success. There weren't a lot of founders who had also failed. Mm. And so we now have access to so much information, access to people, access to best practices. Every VC fund is trying to outdo the other by putting out content, showing how you can build a successful company, pathways to hiring, whatever you need. All that's out there. And I think we do have a lot of things going for us.
Yeah, I think so as well. I mean, I don't think the German system is the easiest system to figure it out in, but I do think that there is a lot going forward. And I do think, even like what you said in the very beginning, you as a founder being open to sharing your idea and just being open and talking and going out there and just putting yourself out there to be criticized and critiqued, but also absorbing the information. Also now things have changed that people are super open as well. So there is this beautiful plethora of information and access of information that we all have.
It's like a perfect storm.
Yeah. Where I even think that, okay, if you are a founder who wanted to found in Germany, it's possible. It might be a bit more challenging. Maybe it's not the path of least resistance, but you're just going to have to find a way to do it. But you're going to need a lot of motivation. You're going to need to love what you're working on.
A lot of resilience, that inner drive that propels you forward. Yeah, be prepared to have that tested.
Exactly. And I think one question I wanted to ask, though, because I'm not fully aware of this, if you are a founder who decides to found, let's say, in the Netherlands or somewhere else, are you still able to take on investors from Germany, for example?
Absolutely, yeah.
Okay.
Yeah, you there's no restriction. I mean, I've seen German companies raise money from U.S. investors. I've seen U.S. companies raise money from German investors. It's, at the end of the day, you have to remember, investors want to invest in something that they understand. And if they don't understand the legal structure, if they don't understand the legal system, they're unlikely to invest. But you can still get investment from anywhere. Now, good luck getting a U.S. investor to understand that they also need to go to a notary to get that investment into the Handelsregister. Now, that's where, that's the kink in the chain, right? Like, that's the part where I've seen rounds fall apart because some investors they don't understand the system. And so they just think, well, can't I just send an email and have it done? Or can't I just do a DocuSign and an e-signature? And they're like, no, you're going to need to go to the nearest German embassy or German consulate, appear in person, prove that you are that person, and then wait, an inordinate amount of time to have that investment actually show up in books. And so those are the friction points that I keep referring to.
Yeah, most definitely. And what do you think that policymakers could do in the near future to actually simplify process, or even just make it a little bit more of an easier process for an investor to invest in German companies, but also at the same time for founders to navigate this environment?
I think they should just look at how regimes in other countries have been able to make a lot of these regulatory policy changes and the results that have come out of that. Yeah. So when you look at France, which had a notorious reputation for being a tough place to do business, why are there more unicorns being created in France and in Germany these days? When you look at the Netherlands, when you look at the UK, when you look at how the reform of the tax system, the reform of some of these policies has led to such a huge influx of people willing to take risks, investors willing to underwrite those risks, make those bets. And the people who benefit from them are usually taxpayers, because it's pension funds who eventually come into these large companies. Sorry, not taxpayers, but civilians, individuals. The economy needs to grow. I think the first step is for policymakers to actually just spend time with either policymakers from other countries, or listen to the founders, the investors, the networks that already exist that are just clamoring for better conditions.
Yeah, most definitely. And kind of rounding it all out as well, as a founder who's trying to build something here, how do you get in touch with, even just in the beginning stages, with angels? And because I remember we were in this workshop with Founderland, and I remember one of the founders asking, how do I get in touch with your angel syndicate? And then the person was like, oh, well, now you know me, so you can get in touch with me that way.
Yeah.
But they're obviously not that open. You have to know someone who knows someone to potentially help you find access to it. So how does one go about that process of just engaging, getting in touch, and even convincing?
So this is the easiest part. Go talk to another founder. If you're struggling to go talk to the investor, go talk to a founder. Go find 4 or 5 other entrepreneurs, or business people in your network. You should have them. Yeah. And go ask them for introductions. Go ask them what worked, what didn't.
And from your perspective, is there anything that you find quite annoying that people do when they reach out to you? Or are there any no-goes? Don't do that.
Definitely don't just call me on my phone.
Fair enough.
It rarely works, but that's also just a personal thing. The thing that I love to remind founders is investors are also humans. We also have families. We also have portfolio companies. We also have problems that we're dealing with. And so we're not, and in my case, I get anywhere from 50 to 80 pitch decks in my email every day. And so I wish I could respond, and I wish I could even look at every single one of those pitches, but I just can't. And so I have to kind of triage my way through my day. Yeah. And just because I don't respond to an email, that doesn't mean I'm not interested. Okay. Just means that I may not have had the time to see it. So what I recommend founders, and I'm guilty of this, right? It sometimes takes me 2 weeks to respond to an email, a pitch. Yeah. Don't just send me the same email again. Like, change it up. Like, try changing the subject line. Try changing. Tell me what's happened in the last 2 weeks since you sent that email that I might have ignored or not looked at. Give me a reason to really look at that second email. Yeah.
And what's actually, because you're talking a little bit about that or alluding to it a bit, what has been a way that you've been approached by a founder that really made them stand out to you?
Bear in mind, I've been an investor now for 13 years. I've seen everything. I've seen founders. I've had founders come to my kids' daycare.
No.
Okay. Bringing their kid in the guise of like, oh, funny seeing you here. We as investors give out a lot of information from the places where we're tagged on Instagram to the restaurants that we love to frequent to our holiday spots. And so please don't stalk an investor is the advice I'm giving here. Don't even pretend that you're accidentally bumping into them after having cyberstalked them.
You see right through that?
I see right through that. I'm like, yeah, okay, no.
Note to self.
Note to self, exactly. No, that being said, I think the stuff that really kind of stands out, I think it's just when founders are really authentic. They explain the situation in a way that I can understand. I'm one of those investors where, yes, I have some rules in terms of what I want to invest into, what I like investing into, but I'm also a sucker for a good story. I want to know. I have invested in companies that were almost, just had weeks left of runway, but I invested because I met the founder and I found something very compelling in them, in their story, in their plan, and I took that leap of faith. And, more often than not, I'm actually rewarded for taking those bets than I am for the sure things. The number of times I've backed founders thinking they can't fail never fails to surprise me how often they do fail or they find a way to fail. Yeah. And the opposite is also true. The number of founders that I've backed where I was like, man, this is such a moonshot. They're going to have to get this and this and this right. And they're telling me that they need to get another 3 other things right. But you know what? There's something about them that makes me feel like they're going to do it. I want to help them. I think I can help them. And so great, I'm on that journey.
And the last thing I kind of wanted to close it out with, because we've talked about so many different topics. We started off with your journey into entrepreneurship. You were starting out in politics, going into data, being customer centric, shifting into a bit of the German ecosystem, choosing the path of less resistance, how one should even figure out how to play the game or leave the game, and even the last couple of topics. So with everything that we've discussed at this point, is there any one particular point that you'd want listeners to go away with?
Take the plunge. Make that leap, right? Do it. Yeah. Maybe don't do it in a place that's where it's hard to do business, but do it. Find a way to do it. Because the act of you showing that you have the chutzpah, the desire to do it, that's the bit that energy is what drives investors. Like, that's what we feed off. When we see that, when we see you really trying your hardest, great. Like that's the founder I want to back.
It's really about that excitement, like watching the drive and the excitement. And it's like, okay, there's this passion behind this person. There's a fire.
That's right.
Let's see where it goes from here.
Absolutely. And I want the founders that I back, I usually tell them, I want you to drive this company either all the way into the ground or as high as you can take it. And keep the lines open. Tell me how it's going. Use me. I want to be able to help.
Well, there you have it, folks. Take the punch. With 2025 right around the corner, this is your sign to take the leap of faith. Jag, thank you so much for joining the podcast in this insightful conversation. And to all of you listening, thank you for tuning in. I hope you found this conversation as informative as I did. Before you go, please remember to like, follow, and subscribe to On the Up and Up on your favorite social media and streaming channels. And with that being said, we only have one more episode left for season 3. So be sure to follow us. And as always, onwards and upwards, y'all, and I'll speak to you soon.